All right, good morning, guys, and welcome back. So, as usual, we're going to be breaking down the trades we are active on and the one we took and the one we are looking to take. Starting with GPUSD, which is a trade we called recently. So, we say that price is in an uptrend, forming series of higher highs, higher low, higher high, higher low, higher high. Now, look, notice what price did. Price switched structure when it break the previous higher low. It switched structure bearish, and then price started creating new price action in the new direction. Now, before this last break of structure, price actually formed something called an inducement liquidity, and that break structure to the downside, break of structure to the downside. So based on what we are expecting on this trade, we are expecting price to take out this structural liquidity to trade to the downside. So we are expecting price to take out this structural liquidity to continue to the downside. So remember this inducement liquidity. So remember inducement liquidity is the catalyst to when price take out inducement liquidity, the next liquidity price is looking to take is the external range liquidity. So our take stop loss, our take profit is just above the structural liquidity at this other block right here, and then our take profit is around the external range liquidity. So that's the reason for this trade. So this is a trade we caught a few days ago, and it's still running. It's not yet active. It's not yet triggered yet, and it's actually an active limit order you can place if you vibe with the trade, if it resonates with you. Now, next setup here called we have actually analyzed this Euro card from last week, not last week, few days ago. So what do we say in this Euro card? What do we have here? This is a previous trade we took, which was a nice trade, and it's using the same logic. Now, before we start and explain this trade, now let's um let's see what is happening here now. So price was bullish here, switched to bearish here, now switched to bullish at this place. How do you switch bullish? We have a last break of structure which serves as a liquidity to sweep. Then we have price breaking the previous. Okay, let me try to map it out for you guys. So what do we have here? We have price was bearish at this point, lower high, lower low, lower high, lower low, lower high, lower low. So what the price is, the price forms a lower high, then sweeps this break structure, break the sweeps the lower low that was formed. Now break structure. Before it breaks structure, it actually forms structural liquidity, inducement liquidity, right? Then finally break structure at this point, which is breaking the previous lower high, right? Once you break this previous lower high, we are now in a bullish, we are now in an uptrend. Price is now have we have a market structure shift, right? And it's expected that price will keep on trading above. So price start forming series of higher highs and higher lows, higher high and lower high, no, higher low, higher high, higher low. Then notice what price is. The price traded up to price forms the last higher low, higher high, I mean, and break structure, which is breaking the previous lower higher low here. It breaks structure. So when price break this previous higher low, what we have as a market structure is a market structure shift. But we need a couple of criteria before we take this trade, because the reason why we can just call this an invalid market structure shift yet is because of in some cases this can actually be price just trying to take out this inducement liquidity to tap to this other block that is formed, right? Just as price usually do. So sometimes price will just take out this previous higher low to trade to this other block that is formed and continue to the bullish side. So it has 12 liquidity tap into this other block formed and to continue to the bullish to the uptrend. That's why what we want to look for is for a couple of criteria. The first criteria is we want to make sure that this is actually happening in a key level. And as you can see here, this was actually happening on a breaker block, which was the catalyst to the downward move you're expecting. So apart from that, we're not going to just be taking an entry. We want to see something else. We want to see something else that will make it high probability. And this thing we saw was structural liquidity. You can see structural liquidity here. So we are expecting price to take out this structural liquidity, tap us in and continue to the downside. Because when price take out this inducement liquidity, this is inducement liquidity. Sometimes I call it structural liquidity. But basically inducement liquidity. If you guys don't know what is inducement, this is basically what is inducement. Let me explain it in a bit now. Now you guys know the normal market structure. So price forming higher highs, higher lows, higher high, higher lows. Now price and smart money have actually noticed that what traders usually do is that when price forms higher high, they put set limit order at this order block. So what smart money does is instead of taking trading to this other block, instead of it trading to this other block to continue to the upside, it's actually going to take out this previous higher low, right? They're actually going to take out this previous higher low as liquidity, then trade to the previous to the next other block lower than this one to take out this way to continue. So this is usually called this higher low before the main low is usually called a structural an inducement liquidity. So it was created, the inducement was created before the up move. So that's what we mean by inducement liquidity. And you can see it in this place. This can actually occur. Okay, just let's forget about that. I'll make a dedicated video about it. Right. So this is what we have here. We have this inducement liquidity. We're expecting price to take it out to continue to the downside. So that's the logic behind this trade we are expecting to take. So something you'll be asking yourself is that how are we going to know the inducement liquidity? Well, because if you look at this thing, you can see there's a liquidity here, there's a liquidity here, there's a liquidity here, and this can also serve as a liquidity for price to tap into this trade to this other block. So how do you know which liquidity to pick? Why do we pick this one? Well, because of this one high. The reason why we are trading from this high and saying that this is the structural liquidity or the inducement liquidity is because of this high actually swept liquidity, right? It swept liquidity and it breaks structure. And this why we are taking this as our inducement liquidity is because it's the closest liquidity to this high. I don't think this high, I can't take my trade from this high, from this one other block around there because of for many reasons it is mitigated. One is that for many reasons. One is that it is mitigated, it's already mitigated. Two is that there's no liquidity that is swept. So all these things, I'm taking all these things as my structural liquidity. I'm looking for price to take this trade to this place and expand to this side. Once again, this is an active limit order, a trade that I'm actually active on. If it resonates with you, you can actually take it. Now, if you are to go back, so another trade we are actually active on is this is actually a new limit order that I set is Euro JPY. Let's see what we have on Euro JPY. Okay, so this is what we have on Euro JPY. Right, what is the explanation behind this? Now, look, notice what we are having here. This is basic. Just if you understand market structure, you don't need this trade doesn't need explanation. But since this is about reading market structure and coming up with a setup, this whole series is about reading market structure and coming up with a setup, we are going to read it. So you can see what we have. We have a high, then a higher low, a higher high, a higher low, and then price forms this inducement liquidity first before we created a higher low, a higher high, right? So what the price did here, price forms a high and price forms a low and break structure forming a higher low, right? So why do we set this our entry at this point? Why do we set this zone here? Why are we interested in this thing? Why so what we are expecting price to do is to take out this is actually serving as our inducement liquidity because of just as I explained to you guys. Smart money knows that people usually place their limit order at this low because of basic market structure, right? Everybody is aware of the basic market structure, which is this thing: higher high, higher low, higher high, higher low, higher high. So what people traders usually do is just place their limit order at this point and take a trade. Place their limit order at this point and take a trade. So what smart money usually now do is, instead of them to trade to this, excuse me, let me dress this up. So what they usually do is, instead of them to retrace and trade to this other block, they are going to take out this other block to tap into the next other block and continue to upside. So that's what we are expecting on this trade. We are expecting that price is going to take out this low, right? Take out this inducement liquidity, tap into this other block at the same time, take out this second one as well and continue to upside. So what make this one setup special? Why didn't we go for this one as well? Because this is a nice low. Why didn't we take this other block, right? The reason why we didn't take this other block but rather choose this one is because of, to start with, obviously this one has structural liquidity, and as price is going to take out this one, it's going to take out this inducement liquidity. So this is nice. But apart from that, something, the reason why we choose this one, because you might be saying, we would, why didn't we choose this one as well? Why didn't we choose this one as well? Right? Why didn't we choose this other block around here? Right? And price is going to take this structural liquidity to tap into this other block. Why didn't we choose it? Well, the reason why we choose this one over this one is because this one did a couple of things, right? This one swept liquidity. This one that actually swept liquidity. This one is the one that actually swept liquidity. So, and in most cases, I want to see that, and it actually is one that swept liquidity and tap into a key level, this breaker block right here. So it did two things. That zone that we're looking to buy from is the one that swept liquidity and tap into another block. Let me get rid of this, excuse me. So this zone is the one that swept liquidity and tap into a key level. Right? In this case, this key level is a breaker block, as you can see it here. So that's the reason why we choose this one low over this one low, because of, if you look at this one low actually have the same criteria, almost the same criteria with this one. We have our liquidity that is going to get taken out, and we also have our key level, which is our other block. But the reason why we choose this one over this one is because of, we have a liquidity sweep and we have price tapping to a key level. In this case, we don't have it. So that's the reason why I chose this one over that one. But something to take note of is that price is not always going to follow this rule. There are sometimes that you see price respect this one, doesn't actually swept liquidity, but disrespect this one. But something you need to take note of is that you need to have a systematic approach to reading market structure. If you don't have a systematic approach, you don't have rules, you're always going to get confused. You'll be like, which one should I take? Which one should I take? I don't care if this one works. This one, you can see that this one zone actually work. No structural liquidity in this one zone or inducement liquidity, but it's working. We already have a reaction from this place that is a very nice trade. But I don't look at this small this minor aspect where it work and try to change all my strategy. No, I have noticed that based on statistic this works, right? So instead of me trying to make a big deal out of this once in a while price action that just played out, I just, I'm looking at more of probability. This one works most of the time. This scenario, price usually respect the other block that swept liquidity and tap into another key level, and also have a liquidity is going to take out. So I don't care that this one played out. This one played out well. I don't care that even though price take out this one and respect this one, I don't care. Even though price take out this one and respect this one and did not respect this one in this case, I don't care. Most of the time, this one that swept liquidity and tap into another block works. So that's the reason why I work with it. You need a systematic approach to reading market structure and reading price and taking a setup. You don't want to look at this and say, this work, because this is a mindset from most of ICT trader. They try to justify everything that happened. They try to give an explanation to everything that happened in price, and any trader that does that doesn't make money from trading. The reason for it is that you cannot explain everything. I don't care. If this was ICT, any of ICT trader, they're going to try to explain the reason why price is reacting from this place. I don't know the reason why it's reacting from this place. Price just does its things, and I don't care about it. All I care about is my entry at this point, right? So I just hope you guys understand what I'm trying to say, right? You need a systematic approach, and the reason why I'm taking this one, as I said, liquidity sweep into a key level, structural liquidity is simple. So I'm expecting price to trade to that downside and continue to upside. And something to take note of is that based on my backtesting results, because I don't care about smart money concept or ICT, what I care about is backtesting results. I go any concept I see, I go and look for which one have statistical edge. So I'm usually big on backtesting. So something that I've noticed that in as much as price is reacting off of this zone, right, is already reacting off of this zone. Price is not going to take trade all the way up to this place. Rather, what price is going to do is going to retrace to premium and then finally take out this liquidity, tap into this zone. Now this zone will be the catalyst to the what price will trade to this place. So if I've bought from this zone, one is low probability, two I might not get that expansion to the upside. But this zone, I think this zone price trading to this place is what we're going to give us and the catalyst will be the catalyst for price to take out this external range liquidity. By the time price take out all this liquidity at this point and trade to this zone, there will be enough liquidity for price to continue to the upside. So I hope you guys understand what I'm saying. Now we have another trade. I think we still have another one. Which one is this one we just analyzed? Euro JPY. So let's look for another one. Euro GBP. We have something on Euro GBP, I guess. So okay, we have a setup on Euro GBP. I think I've not yet marked it out, right? Okay, this is the setup. I think this setup was on the 1 hour or 30 minutes time frame. Let's look at the 1 hour time frame. So this is setup we're looking for, right? So let's try to do a little bit of top down analysis, starting with the I think the one of the time frame I used that was clear was the daily time frame. Now look at the daily time frame right here. What do we have here? We have price. Let's try to read the market structure. We have price breaking structure at this place. So this place is our higher high. So what the price did, price is my distance to. So what the price did here after price take out this um liquidity at this point, it breaks structure forming a high high. Then we had a retracement. After price had a retracement, we had a new structure, a new breakout structure at this point. So this is where the breakout structure occurred. Don't get confused with this new swing. This is the major swing. This is our swing structure. From this low to this high is our swing structure. And this is actually an inducement liquidity that price is going to take out. Let's mark it out. This is actually an inducement liquidity that price This is actually an inducement liquidity that price is going to take out to continue to the upside. So we're expecting price take out this inducement liquidity. Price take out this inducement liquidity, then give us our new structure, new expansion to the upside. Now you might be asking, this is our swing structure, all right? This is our swing structure. This is the low, and this is the high. Why didn't we choose to buy off this other block? Because this is the last other candle before this thing. Based on our strategy, this is what we're looking to trade. Why do we choose this one at least? Not at the extreme, but rather in between the move. Yeah, because of number one, this other block has been mitigated multiple times. Number two, this other block, this one actually have structural liquidity. Inducement liquidity is the one that the inducement liquidity is close to it, and we actually have a sweep of structure in the 4 hour time frame. We have price sweeping liquidity, so we have a sweep liquidity sweep, price tapping into a key level this other block. We have liquidity sweep, price tapping into the key level this other block. Then we have structural liquidity and an actual breakout structure, and all these things, if you have to mark out this range, this our swing structure range, it's using our fib. We have mark it from the high to the low, from the low to the high. You can see that all this thing, this whole setup you're looking to take is in line with the is actually at discount, so it's safe. Now as price, you see what price did here. Price finally tapped into our key level, so we are expecting an expansion all the way to this upside. But we are not going to be taking a trade from here because this is a higher time frame. We want to go to the lower time frame now. On the lower time frame now, you can see what we are having here. We have a shift of structure. We have price, what the price did here. We have price shifting structure. Now after price shift structure, we have a retracement to this other block. Now price started forming bullish market structure. This market structure up. I hope you guys are seeing how I'm reading price and coming up with live setup. These are actually the live setup we can take. So we have a low, a high, then a higher low, then a higher high. This is where price actually breaks structure at this point. Okay, no, we need to be systematic. Price did not break structure at this point. It's only wicked. So this is our higher high. So now, where is our swing structure from this place? Our swing structure is actually this low to this high. Is our swing structure. So now what do we have here? We are looking to take, you can decide to trade from this other block. Although I use the QMR, but you can decide to take, although I'm using QMR, but you can decide to take off, trade off of other block, right? You can decide to mark this other block, but the other block is not clear, right? So this is the reason why I choose QMR. If you don't know what is QMR, QMR is that last candle, last other block that failed. This is another block that failed, so you can mark it as a QMR. So that's this thing. So we're expecting price to sweep this inducement liquidity that was formed and then tap into this our QMR, or you can choose the other block, whichever one that suits you. The reason why I use the QMR is because of it's clear. The other block is not clear. Then we can put our limit order at this point. There's our buy and sell. We can put our limit order at this point, at this QMR, and stop loss at the low. Then our take profit can go all the way to this high. That's our take profit, the external range liquidity, because to we're expecting price to take out this, to tap into this space and continue to the upside. So these are our external range, our take profit. But there's two ways you can have your take profit. You can either have a systematic way of marking take profit or based on draw on liquidity. Now I love systematic way because of it removes emotional trading. Something that I've noticed over 5 to 6 years of my trading experience is that if you don't have a systematic approach and have a approach of taking setup based on key levels or based on drawn liquidity, one thing is going to happen as price is trading up the all the way up to this point. If you have real money in line, you're going to be price I've traded up to this place. I need to take profit. I need to close my profit at this point. This might be the structural liquidity. Price might take, so brings brings emotional trading. And as a beginner, I really suggest you have a systematic approach so you can remove emotions. If you didn't trade to a specific risk reward, you're not going to be closing your trade, and set a specific one. So if you are looking to set a specific one, I suggest you go with 3 hour. Right, put your stop loss at fixed 3 hour. So that's my suggestion. But if you want to have if you want based on structure and draw on liquidity, you can, this is where your draw on liquidity to be. It's external range liquidity. And if you want a tighter stop loss, if you want a more huge risk reward, you can move your entry at, you can lower your entry. Once you lower your entry, you are reducing the chances of you getting triggered, but you are increasing your risk to reward. What do I mean by that? As you can see, when we had our risk to reward at this point, when we had our entry at this point, we had a risk to reward of 4.27 hour, which is 4 hour. So basically, what we are saying is that if we risk $100 here, we'll be making $400. But by the time we move our entry at this point at lower, we now have a risk to reward of 8.4. So basically, nearly, let's move it to, okay, when we move it at this point, we have a risk reward of 10 hour. So what we are saying is that if we reach $10, we're going to be making, and if we reach $100, we're going to be making 10 times, which is $1,000. But the problem with moving your stop loss close so far away from the place price should expand from is that you have low chances, you lower the probability of you getting triggered, because price can actually come back here, tap this your structural, take out this your structural liquidity, tap at the tip of this your QMR, this your key level, and start expanding higher. And what you have is a missed entry. Although in some cases price actually swings down lower, into drawdown. So those times when your trade goes into drawdown, if you have moved your stop loss, that's when you have the best scenario. But sometimes price just tap to the key level and start expanding. Yeah, so let's check. Yeah, so that's the yeah, so these are the trades we are looking to take. Right, these are trades we are looking to take for the coming week, and I'm actually active on all these trades. All these trades I show you, I have set my limit order on my personal trading account on my prop firms, and I'm also going to post it on my private group and on my free telegram channel, link in the description if you want to join. So if you vibe with the analysis, you can take it, because I'm actually on this trade. If you don't vibe with it, you can make your own trade. The reason why I'm making these things to build your confidence and also teach you live market structure. Let you see me executing what I'm teaching. It builds confidence in your trading. Yeah, so I hope you guys like it. As always, if you guys like it, like, subscribe, and also click the link to join my free telegram channel. You doing all these things makes me know that you guys are interested in this kind of content, because this content is not something that people usually do. I don't know whether people are interested in it, so I want to know by you guys liking it and also following up. Yeah, and if you have any question, let me know. I'll answer. I'll reply every comment. I'm going to see you guys around.